Welcome to Financial Issues, where we help you steward faithfully by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
This is Financial Issues, where we help you defund darkness and fund the light by investing with biblical integrity. Welcome, folks, to Winning Wednesday. Great to be here with you in the middle of the week. That's right, Mark. Seth Udinsky, Sam Case, and your host, there he is, Mark Manila. Mark, you ready to win?
Absolutely. Welcome, everyone. Glad you're with us this morning.
Yeah, great to be here, guys. 610-363-1110. That's the number, 610-363-1110. We would be delighted to hear from you right now, folks. Give us a call. Winning Wednesday, as we said earlier, your calls and questions. Also, guys, interesting, are we running out of stocks in the stock market to invest in? Apparently, the Trump administration is actually doing something about this. Of course, the question that then begs the question, could that possibly make things worse for that situation? It's interesting, guys. You know, we're looking at these IPOs this week with the, the SpaceX IPO looming on Friday. It's turning into IPO week, I think for good reason. But it kind of leads into this topic here, guys. And Sam, why don't you get us started here? Because there are other IPOs that are happening other than SpaceX, kind of under our very noses, it seems.
Yeah, that's right. That's right. So SpaceX is the big one everyone's talking about. But earlier this week, OpenAI, the big granddaddy of AI with ChatGPT, confidentially filed for that IPO with the SEC. Coming days before SpaceX is about to go live on Friday, and only a week after Anthropic, another big AI company, also filed. It's estimated that OpenAI will be valued at around $850 billion. That's based on a recent valuation there.
Yeah, interesting stuff. Mark, sorry, go ahead. Go ahead.
No, the new IPOs are great. I love the idea of it. It's more. I don't know if you guys realize that our stock market is really from the peak about 20, 30 years ago, probably about 20 years ago, 25 years ago, we're down to about 40% of the number of stocks on the exchanges that we had then. So we have a whole lot more money chasing the same stocks. Right. So it's good to have some new IPOs.
So, Mark, you had mentioned yesterday this whole idea of, that it seems like there's some supply and demand happening here where there are fewer and fewer stocks, but we're seeing more and more IPOs. But that means that there's that there's opportunity for what we have invested in the market to go up with more money going into it there. Guys, we had talked about this yesterday. You remember Patty in the chat asked this question. You remember Dan talking about running out of shares in the stock market and that being due to kind of a lack of IPOs. At the same time, companies were increasing buybacks and wondering if these mega company IPOs challenge that assessment. Mark, could you just kind of remind us what you had said there?
Yeah. Well, first we need to go way back. Let's go back to the 70s. Before the 70s, it's less than 30%. Closer to 20% of the households had investments in the stock market. In the 70s, a lot of things, in the 80s, a lot of things happened. We had the introduction of IRAs. We had the introduction of 401ks, moving from pensions to 401ks. Yeah. And more households got involved in the markets. And today, it seems like everybody, including newborn babies now, are involved in the stock market with the Trump account. So we have a whole lot more money chasing a lot less stocks in the market because today, we have about 3,600, 3,700 stocks that are listed on in the U.S. And 20 years ago, it was 1990. Off the top of my head, 1997, we hit the peak with about 7,500 stocks. So we're almost half now of the number of stocks. So when you have more money chasing less goods, that inflates the price of the goods. So that's why our markets are so huge. That's why everything's going up. Now, a lot of people are concerned about why do we have this going on? Why are there less stocks? Well, because there's more private money that a company could use instead of going public and having to go through all the regulations and all the expense of filing and everything. They could go to a private company and get money. They could get backers for their company there and keep it private, maintain more control, less scrutiny, and grow the business that way. So it only makes sense sense. Now, some people say that's a bad thing. I don't think it is a bad thing. It's less for you and I to buy, but that doesn't mean it's a bad thing. It means the private money is helping companies get bigger and bigger and bigger. I used to always think that companies would do an IPO. Now, this is a lot of years ago when they were a very small company to raise money to start building their businesses. But what we're seeing today is we are seeing businesses that are trillion-dollar companies already. They built it on private money. They've grown it. They developed. They've created this organization that is generating billions and billions of dollars. And now they're going public. So it's a little bit different. And the markets have changed. And I think that there's two things we need to think about on this. First, the markets have changed over the years, over the last 30 years, let's say, to the point where you need to be an intelligent investor or you're going to get eaten alive like no time before. And secondly, the markets have changed in a way that they're a more mature market in what's coming to the market. And if we can still maintain the disclosure and the things like that, you have the opportunity to invest in a way that is intelligent and not just blindly like no other time as well.
Well, Mark, you know, what's interesting is it seems like the Trump administration has an eye on this as well. Sam, you want to give us the catchphrase? What are they saying here?
Just take a guess from the Trump administration what that catchphrase might be. Make IPOs great again. That's according to SEC Chairman Paul Atkins recently telling the New York Post that, as you said, Mark, there's about half as many public companies today as there were in the 1990s. He said that number will likely keep falling unless something changes. He explained in a separate interview that he sees a couple of main barriers to going public, pointing mainly to regulation and legal pressure. So let's take a listen to what he has to say there.
One is because of the cost of regulation, you know, the amount of disclosure. The second is all the litigation that we have in the United States and steps that the SEC has taken in the past and others to not discourage lawsuits. And then finally is what I call the weaponization of corporate governance, meaning that if you own a share of stock in a company, there are resolutions that shareholders propose to be put before all the other shareholders. Unfortunately, the SEC kind of created this mechanism to have people be able to oppose those questions and make those proposals. It's just being now weaponized by what I call politicized shareholder activists.
Politicized shareholder activists, way too much regulation, all this paperwork. Is he right about that? Are these barriers that need to be addressed?
Absolutely. Absolutely. They all need to be addressed. But here's the goal should be make it simpler. That's lower unnecessary costs. Where do you think all the costs in the IPO come from? It's not, you know, like going to anybody but the government and or the spending necessary to do all the reporting, do all the research. But guess what? If you're a corporation worthy of being owned by the public, you should already be to the size where you are already doing that internally just to run your business. There's no new information for an IPO that you don't need to run your business. That's the bottom line. So I say lower unnecessary costs like the fees and the charges and the filings that aren't necessary, but keep the material disclosure. Keep the things that are necessary to protect investors and give them the information to be making wise decisions. So if we lower the cost by unnecessary fees and whatever is going on there, and we keep the disclosures, but get rid of the unnecessary disclosures that don't help people make decisions, then we'll see more people going public. Because if it's cheaper to go private, if it's cheaper to go to some investment group and say, hey, we need $30 billion to expand our business, and you show them all the information you already have because you've been running your business, keeping your books, and they say, yeah, you're worthy, and they give you the money, and it costs you a fraction of what it costs to go public, and you don't have the scrutiny and you don't have all the problems. Why wouldn't you go private? It just makes sense. So, yeah, public money needs to compete with private money, but not to the point to where it puts mom and dad and grandma and the kids at risk for investing without knowledge, without wisdom.
Yeah, no, definitely.
Yep. Absolutely. That's well said, Mark. Hey, folks, listen, if you got a question about this stuff, obviously this IPO conversation is very important right now because we're seeing this happening more and more. Of course, we have an eye on Friday with SpaceX's IPO. But give us a call right now. Number 610-363-1110. Again, 610-363-1110. Mark, we're coming to the end of the segment here, so I might save our questions, and we're even get some calls right now. So maybe we'll just wait until the next segment until we get to this topic I was going to ask.
Yeah, that sounds good because there's so much to talk about this week.
Yep.
It is a historic week, by the way, and I think we need to realize that.
Yeah.
Every day, kids all across America are coming to school with some kind of hidden pain.
I've seen kids come in who are just so confused about what's right and what's wrong, just having no idea that God loves them. And this just breaks my heart. Crossroads has the opportunity to bring the Word of God right into the public school, to reach children right where they are.
And when we see that happen, we see God changing lives.
We want to see kids not only come to Christ, but pursue a lifelong relationship with Him. And so local churches are uniquely positioned to disciple those children as they become young adults and through their lifespan.
Crossroads comes alongside a church and provides that church with a club structure, curriculum, training, and ongoing coaching for them to run these outreaches in public schools.
If you are burdened for the children of America, consider making a donation to Crossroads Kids Club. For more information, visit reachOurschools.com. That's reachOurschools.com.
Well, I'm going to give a real quick testimony. I've been a partner for 8 years. I count on FISM analysis for my buys and sells. I don't want to be a financial analyst. That's what I'm a partner for.
And we don't want you to have to be a financial analyst.
Financial Issues Partnership is the best value out there. The analytics you guys do really give me confidence. So thanks for everything, guys. I pray for the ministry every day.
Go to financialissues.org to get started today.
Preborn is making motherhood possible for thousands of moms across America.
I found out that I was pregnant. My family, they were like, no, you're not having this baby. I met Miss Linda. She offered to get me an ultrasound. That's where I very first heard the heartbeat. It was really a great thing that I was led to the choice to keep him.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
363-1110. Give us a call, folks. Mark, let's get the phones now. Let's talk to Sandy.
Let's do that.
Calling from Nevada.
Hey, Sandy, welcome to Financial Issues. What's on your mind this morning?
Hi, good morning. So I retired last year, and I am 66 years old, and I work a part-time job. And at the time, I just left my 401k there because I wasn't really sure what I was going to do with it. And I have other investments in other places. But they went out of business last month, and now I have to move it.
Yeah.
So I'll be 66 next year, so I can't make over a certain amount because I am collecting Social Security along with my part-time job. So I'm not sure what to do with it. It's about $180,000.
Okay. Well, good. Let's step back a little bit. You left it there. How often did you go look and change up your investments since you left it there?
I have a financial advisor that I've been using over probably the past 10 years. And so I just left it. I wanted to be conservative with it. And it was still growing.
Mm-hmm. Yeah. And see, I over the 35 years that I help people with their money in my advisory, I would always warn them never to leave money behind for multiple reasons. One is they don't get looked after And for a while, as an advisor, you couldn't even manage somebody's 401k. You could look at it, you could give them suggestions, but you couldn't manage it. Then they figured out a way to let financial advisors help people with their 401ks. But I'm glad that you're going to be rolling over. What you need to do with it is it's not a Roth IRA, it's a traditional, right?
Correct.
Okay.
And I do have a Roth IRA in a different account.
Right. But the 401k, what you'll do with that is they'll send you the paperwork, and what you do is you open up a rollover IRA account. Then you take that, and when you fill out that form, that'll cause it them to transfer the money trustee to trustee, meaning you won't get it, or if you get it, it'll be in a check made out to your account, to the brokerage into your account. Then it'll go into your IRA. So there's no taxes due. It won't be seen as income, so it won't affect your income at this point. It'll just go into the IRA. And then it can stay in there, and you can manage it and grow it the way you want to. If you don't need it, you could put it into a growth portfolio. If you just wanted it to be the ultra-conservative backup plan that you have, you could do that. There's many things you can do once it gets over there. But it's really easy process, nothing to worry about. Ask if you haven't received the paperwork that the 401k administration has sent to you, ask them for that. You'll complete that. Make sure you get your rollover IRA set up at the broker-dealer, and then submit that paperwork, and it'll all just happen. And you'll be in a better place because now it'll start reporting on your quarterly reports from your broker-dealer, from your investment arena, and it'll be so much better for you that way to be able to bring that into your true financial plan.
Right. So the IRA is where it should go.
Yes. It's called a rollover IRA. They're designed. These accounts are specifically designed to roll over 401ks into them.
Okay.
All righty. And once you get it, if you want to call back, we could talk about the next steps, how to determine how to invest that based on your age and your need and your sleep factor.
Okay. All right. Great. Well, thank you so much.
Well, thank you. Glad you're listening, and glad you're with us, and glad we could serve you. God bless, Sandy.
Thank you. God bless you too.
And Sandy, it's so exciting too that you want to take control of that 401k. It's great stuff. Awesome.
Yeah, absolutely.
610-363-1110. Guys, interesting chat comment we got yesterday that I want to get your thoughts on, Mark, jumping back to the IPO conversation. Robert from Texas said he was throwing his hat into the ring for reserved shares of the SpaceX IPO. He's never tried this before. He says, if I get some and it turns out not to be BRI, I'll certainly dump them. But Mark, what is this idea of reserved shares? Is this a good idea? Is this something that everybody can even do? Or is this for a specific type of investment?
No, absolutely not.
Yeah.
It's a party that most people aren't invited to. And literally...
Robert's exclusive.
Robert is fancy. He's part of the VIP.
Right.
And literally, you usually do get an invitation if you're part of that, if you're part of the reserved IPOs. What that is, it's shares that are set aside before the company goes public for certain investors, oftentimes employees. For example, in SpaceX, the employees, part of their compensation has been ownership in the company. Well, that ownership is useless if there's no way to turn it into cash. Well, with an IPO, they can do that. So employees get this, may have gotten this invitation that they could buy, that they can submit to buy stock in the at the IPO price. Also, oftentimes it goes to every major platform like Schwab or Fidelity has a bunch of IPO priced stock that they can then invite special customers. And usually those are like customers that have huge accounts or insiders to purchase. So what a reserved IPO is it's a private party that you get to buy at the offering price. the offering price, not where it goes in the market 1 second after it hits the market, but at the IPO price. And it doesn't mean your desire to buy those will be fulfilled. It depends on how many people request what after they get that invitation. So I think, was it Robert you said?
Yeah, Robert, Texas. Yep.
Robert's got an opportunity. Is that opportunity, the real question is this opportunity good or bad for Robert or for anybody? Well, one way I would look at it, and a lot of people aren't thinking straight right now. A lot of people are just being dragged into this exciting world of SpaceX and all the hype that's been going on for the last 2.5 years about they're going to go public someday and you need to get in before they do.
You're like a moth drawn to the light of the rocket booster and you're getting burned up.
That's well put, Sam.
That's right.
And I really worry about this because we're looking at an IPO price that is what, 90x, 90 times its value. I mean, it just doesn't make any sense. If this stock was already on the market, look at it like this. If this stock was already trading in the market at this price, would you buy it at this price? There's enough information out there to look at this and say, okay, so they have billions of dollars of revenue, but they're still losing billions of dollars of revenue. The bottom line is they're not profitable yet. They're projected to be profitable. They have potential through the ceiling, but they're not realizing it yet. So unless you're a spec buyer, you'd be foolish to buy into this IPO at this time. That would be because I wouldn't buy it on the market where it's at. And I know that at Financial Issues, we'd look at this and say, we're going to wait till reality sets in before we would recommend it to our partners. Now, I've been doing some research to this point. It seems like it's BRI responsible with the information that's out there. We're going to know more by Friday, but at this point, so that's not an issue. Here's the other side of it. I said earlier, this is a historic moment in the market. There's several reasons why that's true. I believe this is the launch pad for the space industry, for the true public space industry.
Mark, I like what you did there, by the way. It is the launch.
Did you notice that?
That was good.
See what I did? Oh, Seth.
What did Thomas call you? An educated hombre in the chat?
That's right.
Oh, my gosh. Stop it, guys. Stop it.
Sorry, Mark.
I didn't say it. Thomas said it.
Seriously, this is the launching pad for the space industry, private space industry. Never before have we had so many companies that are just going to be servicing the space industry. Before they service the U.S. government space agency, NASA, in supplying stuff to them. It's just been all crazy. Now it's really becoming a public moment, a historic moment where space has become a real industry, not just for the government, for people. We're going to see people taking rides into space monthly soon. We're going to see stuff being built on the moon by private companies, not by governments alone. It's a whole new era of technology and investing that we've never seen before. So that's one. The other is over $1 trillion IPO. We haven't ever had one in the past, and now we see three drop like 1, 2, 3. So we're hitting a lot of historic moments here, and I think this is going to go down in history and in the history books for the stock markets. And kids in first and second grade will read about this 20 years from now, this era that we're in. And just because of that, I want to buy a share of SpaceX. I want to have a share that I said, I bought this just as a memory. It's like buying the newspaper at the end of World War II, with the headlines. It's like buying the first Beatle album. That is the way I'm looking at this. Now, am I going to put gobs of money into the IPO? Absolutely not. Absolutely not. I'm going to let it go up like a rocket and crash like a concrete block if that's what it does, and then I'm going to let it settle in till it starts trading like a real stock, not from hype, not from lipstick on a pig, not that SpaceX is a pig, but boy, it's being hyped like anything I've ever seen
It's like
before.
a novelty item at this point.
Exactly.
Yeah.
So you got to be very, very careful is what I'm saying. For investors, do I think it would be terrible to buy it and then just hold it for the long term? At this point, the valuation's way too high. It doesn't have the financial steel yet. It just has potential through the stars.
Well said, Mark.
He did it again.
He did it again. That's right. 6'3", 11'10".
You guys.
I know. Quickly here, guys, right before the market's about to open, actually, yesterday's closing bell saw the Dow Jones slightly above the flat line. The S&P was slightly below. The NASDAQ finished down a full percent. Yesterday, guys, I don't know if you were, I was keeping an eye, I was checking in on the markets, a couple times throughout the day. It was a roller coaster. I mean,
really was,
the NASDAQ was way up in the beginning and then way down. Mark, much like these rocket analogies that you're giving to us here, the Russell 2000 finished just below a 0.5% positive. So it ended up being a mixed bag for the markets as we saw yesterday. Pre-markets I'm seeing this morning, Mark, slightly red and slightly green where we don't want to see it, red where we don't want to see it either, but it's not nothing to sneeze at for sure. So that's what the markets are looking like this morning just before we open. Actually, right as we're opening right now, as it is 9:30 Eastern time.
Well, praise God. And we'll look into what the markets are doing when we come back from this break. I want to thank all you who desire to invest with biblical integrity. If you have to leave us, we understand. We hope you have a great day, and we'll be joining us tomorrow for the rest of you. More financial issues after this break.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
And we're the Gen X.
And we're Samaritan members.
I want to make a point. No matter what happens, I'll always be there for you.
I know.
Every day across the globe, big business agendas go unseen by investors. Things that go against your core values and beliefs. It's time to know your investments. Abortion, alternative lifestyles, gender and identity confusion. If you believe in protecting marriage and life, children, innocence, guarding masculinity, restoring families, defending religious liberty, invest with your values. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
Folks, today's show brought to you in part by our friends at Samaritan Ministries. We're so grateful to be partnered with Samaritan in that kind of health sharing avenue of your stewardship. They do just such a great job, Mark, of providing Christians with an option to be able to really just do the Christian model of biblical health sharing. It's not health care, but it is health sharing modeled by the book of Acts. So grateful for them, Mark.
Amen to that. And, you know, one of the things we want to talk about, hey, welcome to the show, Joel. Let's get you in here right away. Are you with us?
Thanks for having me.
Okay. Well, good, because we've been looking at some numbers and some information. And, hey, Sam, can you help me with this? Could you give us that information about the 500 hospitals failing to provide public with basic price information?
It's quite the doozy here, so let's take a look at this. So the Trump administration has recently come out and warned that, yes, more than 500 hospitals have failed to provide basic public pricing information, as you said, and this is something that's been a big problem. When you go to the doctor, right, you just have no idea what you're actually going to end up paying. So the administration argues that the lack of disclosure is keeping healthcare costs way higher than they should be. Hospitals have either received letters warning or requests to submit plans of providing transparent pricing. Failure to comply with these warnings has penalties as high as $2 million annually for each hospital that does not create a plan to post that clear pricing information. So I like the sounds of that, Mark. What do you think?
Yeah, I like the sounds of it too, but here's the situation. Right now, this is where we're at. Imagine you go to a car dealer, you're looking at about 13 different vehicles and you finally decide on one, but they won't tell you what it's going to cost or what the options cost. You just have to order it because you need transportation to get to work, and you just have to order it. After you order it, after it's delivered, even if it's not working totally right, you still have to pay whatever they decided to charge you. And then when you start questioning things, they won't give you the information about what things cost. That's what it's like going to a hospital today. And that's something that I think Samaritan Purse has always said that's got to stop. And Joel, what do you make of this? Am I hitting the nail on the head, or am I off base?
I think you are. And this is...
Off base or hitting the nail on the head?
You're hitting the nail on the head, yes. Yeah, healthcare is probably one of the only industries that you don't know what you're paying for. I mean, you don't go to the grocery store. Like you said, you don't go to the car dealership and not know. And this is something that goes back even to the first Trump administration, this type of price transparency. And it's just been a really, I think, kind of a slog to get hospitals to comply, as this story shows. And it's really hard to determine why. I mean, it may just be the cost of doing business. And it may be that, these hospitals have a good deal with one, insurer, and they don't want that deal, to go to other ones. And so transparency would reveal that. Could be reputational, that they show that, they're charging the uninsured or certain segments a ton more. But, even at $2 million, I know that's a big number for you and I, but if a hospital's making, $200 million a year, that's a day's worth of revenue for them. So I think, unfortunately, it's just the cost of doing business for them. And so personally, I would love to see, higher penalties actually to try to make these hospitals feel some of the pain.
$2 million annually is nothing. That's a drop in the bucket for these hospitals because they're so huge. And you know what? I think this is disgusting, actually, because they're taking advantage of people in their weakest moment. I know one day I was driving down the hospital highway, and I started having pains in my back, and it got worse and worse. And then finally I had to pull over the side of the highway just to vomit because the pain was so bad. By the time and from there, I decided to get to the hospital, just drive myself. I pulled up at the hospital. I barely could open my car door. I mean, I left my car running. I fell out of my car. I barely walked in the hospital, and the guard starts yelling at me, you can't leave your car there. And I just tossed him, I just... I think I tossed him my wallet or something and said, I need help. And I collapsed, at that time, you don't care what it costs. Fix me, do whatever. Yeah. And I think they're taking advantage of us in those times. And I think they are I know my last day in the hospital, I decided this is all about money. This isn't even about me. They have all these procedures and processes, but all it is to check in to make sure that they stopped in everybody they could get to stop in the room that they could bill Medicare for, immediately goes to the terminal, logs in and says they're there talking to me. And then they bill Medicare for that stay. I had 4 different doctors come in. I had all these nurses. I had all this stuff coming in every day. But when I talked to them, they just seemed to look right past me. They didn't hear me. They didn't see me. You know, it was just, they had processes, but they didn't have any compassion or concern about me. It was all about billing. And I think that's where the hospitals are. And we need to knock that down. We need the government. I mean, this is one of the times that the government could stand up and do something great. But how do individuals, or I guess insurance companies have been trying to knock that down. But how about this? How do you deal with this overbilling? You know, $300 aspirins or charging for pillows and things that we don't get to keep.
Yeah, absolutely. So a lot of it with our members, since we're not insurance, it is just educating them and sort of getting the knowledge in front of them. And we have a lot of tools provided to our members. We have a great tool called Healthcare Blue Book, very similar to like Kelly Blue Book for cars, but it tells you what healthcare should cost. And you can look at that and you can compare providers, just like you would compare, one car to another and this used car with this, features. You're able to do that across providers. And we actually incentivize our members for choosing a provider that has a fair price. So not just artificial discounts, not just a provider that jacks the price up and then gives you a 50% discount and, pretends like that's a good price when next door they've started, way below that, and then also has good service. And since our members don't have insurance, since they're not in networks, it's all in their hands. And so if you're at a provider that is not giving you good service, I remember years ago, I went in for sleep apnea and the doctor actually said to me, "Have you always been this big?" And I was like, "What?" And it kind of took me aback, and I was like, "Well, no." And it was kind of insulting. I thought, well, I'm not coming back to you and I don't have to come back to you anymore. If you're going to talk to me this way, I can go to any provider because it's not my insurer. It's not the government. It's not my employer that's making me go here. I can go wherever I want. And educating our members, find a provider that works for you, not that works for your insurance company, because we're not insurance, not that works for your employer or the government. Find the provider that works for you and your family. And it's just a lot of education on our part.
Yeah. But it is getting harder and harder to do that because, like I looked at the hospital, it's a large hospital chain. That chain owns all sorts of sub-chains that own all, and it seems like every way to make a buck has to go through them. And I really think it's gotten to the point, and I think it's all because of government, because of the government, Medicare and Medicaid, billing and that kind of thing. They've learned to game the system legally is what it's come down to. And their focus is all on that. They own the doctors, they own the doctor practices, they own the ambulance services. They own everything. And it's hard to find anything where we can be comfortable that they're not just taking advantage of everybody. It used to be hospitals were private. We had a lot of Christian hospitals. I remember as a young man staying in one hospital, they came in the room with flashlights at night so they didn't disturb you. They sat and talked to you and told you what was going to go on and why. If they ask you a question, like I remember the last time I was in the hospital, they asked me, "How you feeling?" And it's like, okay, I just had surgery. I have tubes coming out of my side and you just ripped one out of my mouth and all this stuff. How am I supposed to be feeling? And I have all the anesthesia allergy drugs in me and I have these pain pills you've been giving me. How am I supposed to feel? Because I don't even know how to answer that question. And I actually asked them, how am I supposed to feel at this point? And they said, well, I really don't know. We're just supposed to ask that question.
Yeah.
It's like, what do you do? So obviously this is a Seth thing. I say Seth like Social Security. This is a Seth thing because the government has made it possible for hospitals and healthcare to get into the gaming system just like any other company that can run off of government money. And when the government is pouring money out, they're going to do everything they can to get every penny, and so the prices go through the top. I'm so glad we have Samaritan Ministries here, so that makes it possible to shop, not just go where your insurance companies tells you have to go. And so this is a good thing. Thank you so much for what you're doing, Joel. Thank you for Samaritan Ministries and making it possible to have a little better health care and choices in your health care. We really appreciate you and appreciate you being on today. As you can tell by the music, we're going to a break here. We really appreciate you all being with us on this. I hope this maybe lit a little fuse in your mind about what's going on with finances. Hard to be a steward if you can't get the information.
My wife and I help lead a Crossroads Kids Club, and one of the girls, she said, Mr. Dave, you keep talking about like you didn't really believe in Jesus and you were like dead or something, and then like you believed in Jesus and then you're like alive, and I want to receive that. And so we like just prayed there in our group to receive Jesus and owning this idea of life with Jesus for the first time.
Help reach kids with the hope of the gospel. Visit reachOurSchools.com.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
And we're the Gen X.
And we're Samaritan members.
Did you know that an unborn baby's heart beats at an average of 120 times every minute? That steady rhythm, that precious sound, that's the sound of life. Preborn partners with local pregnancy clinics across the nation to help mothers choose life, providing free ultrasounds, counseling, and the gospel of Jesus Christ. To give, just dial pound 250 and say the keyword baby. That's pound 250 baby.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Wonderful to be here with you all, folks. Give us a call. We'll get you in today, 610-363-1110. But you're going to want to call in now because, as you know, 10 o'clock Eastern time always comes, guys. But
it does come around.
610-363-1110. We did get some inflation numbers out this morning. Sam, you want to read these ones for us? What are we looking at here for our dear friend inflation that we love so much?
I tend to say, things aren't looking too hot, but that's the problem. It is looking hot, and that's not so good. Inflation rose at an annual rate of 4.2% 4% in May. That's up from 3.8% in April, so a pretty decent jump there. Meanwhile, core inflation, excluding food and energy, up 2.9% from a year ago and up 0.2% from April. So quite the jump.
So, Mark, should we start throwing things and panicking and lighting things on fire and throwing Molotov cocktails into businesses and stuff like that?
Well, I know a lot of our partners and watchers and listeners like to look at trends. Well, let's look at the trend. In March, we saw headline CPI at 0.9. In April, month over month, in April, we saw it at 0.6. In May, we saw it at 0.5. So effectively, we're seeing a trend month over month of it coming down. If this war ends, I think the majority of this CPI numbers is from energy year over year.
You see that big discrepancy between headline and core inflation, right?
Right. So if you put, and what core inflation is, it's headline without energy and food in it, which seems like a dumb number, but those things can have month-to-month fluctuations in themselves, so they pull them out. That's their excuse for having a core CPI. I think that, we should stay focused on the headline CPI. And
because those are the things you're typically buying the most. That's what I've always thought.
Typically, and even then, it's manipulated. So my idea with government numbers: never trust them, even if this administration is clarifying them and solidifying them in ways never done before.
I always like to say they're always fake, but sometimes they're useful.
Yeah, there you go. Always fake, but sometimes useful. But if we look at these and we break it out, gasoline's been the biggest part of that inflation. Year over year, it's up 40%. Well, we have a war going on with where they're holding oil hostage. So we're going to see energy and gasoline go up. Trump was right. We're going to hit a little inflation because of it. But it will go away once it's over, because we have a strong economy, as we've seen in the numbers, month after month since he's been in. And I believe that what we're going to see is an incredible economy, and these numbers drop drastically. So it's something that has to happen as we secure this world against terrorists.
Speaking of securing this world, Mark, for good, looks like for our Winning Wednesday topic today, it's great to see this. We're seeing a rededication across various parts of the country of the month of June to faith and family. Pretty cool. What do you think?
I love that.
Yeah, really awesome stuff. Coming on the heels of that national rededication we saw last month in the National Mall, everyone coming together to rededicate us as one nation under God. And now a couple of Republican states are doing something similar, although their own different flavors here. So one of them, I really like this. This is Arkansas Governor Sarah Huckabee Sanders proclaiming June to be Fidelity Month. And what she means by that is fidelity to the core principles that make this nation thrive. So fidelity to God, family, community, and country. Really those foundational ideals that she says make us great and make our communities great. Meanwhile, in Tennessee, we have Governor Bill Lee declaring June to be the Nuclear Family Month. In his proclamation, he said the nuclear family, consisting of one husband, one wife, and any biologically adopted or fostered child, is God's design for family structure and, again, is the bedrock of society since the creation of the world. So two really cool dedications there.
Amen and amen to that. It's so exciting to see those kind of things happen, that focusing on what's right, what's pure, what's good. That's what the Bible calls us to do. And that's what we see growing again. And so good. It feels good, doesn't it?
Really does, Mark. Yep. Mark, let's get to this question here. It's a good one. Chris is 56. He says, hey, Mark, could you please explain the difference between the two of the new Timothy ETFs and the old one? So he's asking about TPLC compared to TPFC and TPFG. I'm managing two portfolios, one for my use, I'm 56, and then a smaller portfolio, which is for my grandchildren. That one's following the growth, mine's in the growth and income. Do I need to diversify the large or medium cap growth funds into all of these ETFs, or should I just pick one? What do you think?
Well, it's a great question. These funds sound similar, but they're not doing the exact same job. Let's take a look at them. TPLC is is the old core ETF. It's a Timothy Plan large mid-cap core ETF. Yeah, it's kind of like an index, a large mid-cap index of biblically responsible companies in the large mid-cap arena that stretches across every sector. So it's really nice. It's designed for long-term growth while trying to reduce the volatility compared with other major market indexes. So that's what that is. So I've used it. A lot of our partners are in it, and I know why, because it is kind of steady. Yeah, it's a roller coaster ride, but it does have decent growth over the long term. TPFC is one of the new ETFs, and what that FC stands for is free cash flow. It's a way to evaluate. It's part of the financial steel of a company. Free cash flow is what's left over after capital spending and operating expenses. So if they have strong free cash flow or free cash flow trends, meaning they're growing that free cash flow, that shows substance in what this company's doing. It says they're being a solid, responsible, growing company. So looking at that, they now have this fund, which is a mid-cap fund in general, with strong free cash flow or free cash flow trends. So that's good. You got a mid-cap fund based on free cash flow. But then the TPFG is taking that same idea of free cash flow, but applying it to more of a growth-oriented U.S. large-cap growth companies instead of mid-caps. So now we have free cash flow and we have a large cap. So we have large cap, mid cap, and then a large mid kind of index fund, a core index fund is what I would look at it as. So here's a simple way to think about it. TPLC, broad core holding. TPFC, quality, value, free cash flow tilt to mid cap. TPFG, quality, growth, free cash flow tilt to large growth cap. So large growth companies. So do you need all three? Maybe or maybe not. There's nothing wrong with holding all three. It's a way to diversify more. I know there'll be some overlap, I'm sure, and we can look at that someday and see what the overlap is. But they're all U.S. equity ETFs, all BRI screen, and all largely fishing in large and mid cap pond, but for different types of stock. So for your growth and income portfolio, yeah, TPLC could be a core, and if you wanted to add the TPFC to that to get into a different capitalization of stocks, you could, and you could complement with the TPLC. If the portfolio, you could have all three, or you could just focus down to the original if you wanted to. But I don't see any reason not to. And for the grandchildren's portfolios, quite frankly, I'm comfortable with owning all three in it. So just one thing to think about, the TPFC and the TPFG, they're fairly new. The free cash flow ETF started when? Last month, I think it was. Mid-month, was it?
Yeah.
Yep. So we got to be careful. It doesn't mean they're bad. I like the way they're looking at it. I like the holdings that I'm seeing in it. But I wouldn't rush to large positions. So that's just another reason to maybe in your growth section of your portfolios to cover large swaths of it with a little bit of each, all three.
Awesome. It's a great one, Mark. Really good. Hey, quick question here from our chat. Claude asked earlier, what about a limit order on an IPO, Mark? Maybe 10% below. Is a limit order a good idea on an IPO because of the
Absolutely.
volatility?
Yeah. And if it goes through the ceiling, it won't get filled. If it drops, you'll buy it. If it drops beyond that, you'll buy it at your limit order and you'll take a little less hit because you put a limit order on it. Not a bad idea. So, yeah.
Yeah, good.
I think it's a great idea.
Good. Hey, Mark, just one quick note as well, partners. Be on the lookout for an alert coming out for our upcoming partner conference call. We do have a conference call coming up very soon. So check out your spam folder, your email,
very
your
soon,
alert
like
page.
tomorrow?
Like tomorrow, Mark. That's right. Yeah, like real soon.
It's almost as soon as it can get.
Absolutely. So just a reminder, your email or the alerts page on the website is going to be the place to go for that. So hope you'll all be able to join us for that conference call. It'll be great to be back together again, Mark. It'll be fun.
It really will. Yeah. You know, we've had an interesting show today talking about the IPOs, a historic week in the market. There's a lot of things going on. And tomorrow we're going to continue those conversations because hopefully we'll have a guest on. It hasn't been confirmed, to talk about whether SpaceX is clean or not, and to talk about other aspects of this historic week. I'm glad you joined us today. I'm glad that we could serve you today. Thank you for joining us, and thank you for honoring God by investing with biblical integrity. I look forward to coming together again tomorrow.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.